Hello traders, Alla Peters on March 1st. We are preparing for oil news release in 8 minutes. We have no idea what oil news is, and it does not matter if you know where Fibonacci levels are. You must respect oil news due to volatility, but Fibonacci levels show you where price heading to far in advance. This is what played out with these Fibonacci levels before. Every single time we had bearish news and every single time oil rallied because Fibonacci reversal zone was present. Last week, however, we had extremely bullish news, first time in very long time, but Fibonacci resistance was present. For that reason, our bias was firmly bearish. This is right now your key Fibonacci support if you are a day trader. Right now, oil is showing to us that it's heading much higher. This will remain Fibonacci resistance. Oil will give us massive number of hiccups before it will get here. Oil will be very unpredictable at the time of oil news release. Let's look a little closer. So on the way to 54.90 level, oil will give us a lot of hiccups at 54.50, 54.60 levels. Bullish rally in progress, your bias absolutely is bullish. However, bullish rally on oil hourly overextended. And that's causing a bit of problem on oil currently. So, bias firmly bullish, 54.50 will be a problem, will be hiccup. If price will survive this area, it's heading drastically higher. 54.90 first Fibonacci resistance. If oil will break through this level, and you must know the rules before you ever take position on oil, oil is heading drastically higher. This is your retail levels. This is what you use as day trader before you ever take a trade. This level is drastically more accurate than oil news will ever be, as again, picture perfect reminder why I always bring oil news to the trading room, as you're witnessing time and time again, that investing on fundamentals and news does not work, that Fibonacci will always override any news, as every single time oil reminded you. Knowing Fibonacci will keep you out of trouble. As shorting oil was not an option at the time of bearish news, and buying oil was not an option if Fibonacci resistance is present. So, bullish rally on oil overextended. Buying oil right now randomly bad idea. Expect major hiccups 54.50, 54.60. If oil will survive that level, oil will head to here. After this, here. So, bullish rally overextended. Knowledge of the rules is a key if you are a day trader. Here's oil long-term levels. This is where oil is now. This is a chart present in front of you for years. Weekly chart is my favorite chart. Weekly chart is what I use when I work with institutions and hedge funds. So, bullish rally on oil started at the start of 2016. Right now, oil overextended, stuck in massive correction between these two Fibonacci support and Fibonacci resistance levels. And that's a bit of a problem. So, this is very important resistance. Again, it's all about hot pink levels that you can never ever ignore, as this support and this resistance always present. So, massive correction on weekly, overextended bullish rally on hourly. And this is the chart that present in front of you for the last 6 years. If you choose to hold position for years, this is a chart you use. And this is a chart that will remain in a play potentially for the next 10, 20, 30 years if you invest on oil long term. 2015 bullish rally encountered this hot pink resistance and collapsed from this level. Reminding you, if bullish trend is minor, you cannot ignore this level. This is where buyers stepped in from in 2016, struggled immensely for many months to break through this level. This will be a major obstacle on oil next. As long as this support is respected, if you invest on oil long term, this is where oil is heading to next. Buyers firmly bullish. The only problem with oil and why oil been giving us so much headache, bullish rally overextended. That's a problem. That's why oil been in so much pain. So, when it comes to day trading, extreme caution. Overextended bullish rally right now will give us a bit of a pain before it will head drastically higher. So, big red flag, 54.50, 54.60. So, this is what expected on oil. Oil news in 1 minute. Please remember, every single time, oil news completely opposite than any other news. Anything above 2.5 ME is bearish, anything below is bullish. Undersupply is bullish, oversupply is bearish. However, we know extremely well, overextended bullish rally, we're expecting massive hiccups at 54.50, 54.60 level. So, oil news at any moment. As I warned you on S&P, when S&P been stuck in massive correction, waiting for oil news. Oil news is out, traders. Incredibly bullish. Shock or not. How did I know that my bias is bullish? Simple. Fibonacci said so. Incredible undersupply on oil. We knew well before oil news release that our bias is bullish. However, expect hiccups. Here's a pullback on oil for 10 points already. Let's convert this chart to 1 minute chart so you can see more clearly inside. Picture perfect reminder, shock or not, bullish news. I said we expect an obstacle at 54.50. Boom. Knowledge is power. Wouldn't life be magic if investing on the news worked randomly? It doesn't. This is a big problem. That's stopping rally on oil. But this is Fibonacci support, hot pink line. So, oil in pain, testing your knowledge. You know what price is telling you? You know where to enter. You do not enter randomly anywhere near 54.50. Clear on that? So, this is Fibonacci support. Before oil will go on bullish rally. This is an obstacle we expected. So, you know the rules, you know what to do. All about 54.50 area. All about knowledge of price action and the rules. And that's what price does every time. And that's how price testing you for knowledge of the rules, no matter what you trade. Bullish news on oil, testing you. Do you know what to do? If you know Fibonacci levels, if you know price action rules, you are in fantastic shape. You know extremely well what you're waiting for. So, it's all about this support and it's all about 54.50. Oil in pain. Stunning bullish news, but 54.50 not letting price through. So, exact same formula present on any instrument, any time frame, no matter what you trade. Bullish news does not mean a thing. Fibonacci does. Knowledge of price action does. And that's how you stay out of trouble. If investing on fundamentals and indicators and news worked, everyone would have been Bill Gates. Somehow it doesn't. What works is knowledge of price action. What works is knowledge of Fibonacci. As Fibonacci is the only predictive tool in the market. And once again, at the time of oil news, price reminding you, cannot invest randomly based on bullish news. But if you know where the obstacles are, if you know the rules, you can trade any instrument and any time frame. Listen to the students, listen to Tashi, listen to Sam, listen to William, listen to Joseph, listen to anyone and everyone who is sharing their success stories and what they trade. Because price the same is everywhere, no matter what you trade. Risk management and account size and trader psychology makes a world of difference. Fibonacci support respected, level present in front of you since early January. And that's where we are. We expected 5450 will be an obstacle, and we expected this Fibonacci support respected. Oil testing you for knowledge of the rules once again. But this is exact same level present on oil weekly. All about hot pink line. It's always present. Before it had taken oil many months to break through this level. Was ultimate resistance. Now it's ultimate support, and this is your ultimate resistance. Institutional levels. That also present on day trading chart. Buyers remains bullish as long as this support is respected. Here's oil. We expected this to be an obstacle. It became a major obstacle. Bullish news did not mean a thing. Agree that? So, where's oil heading to? 53.15. As I said to you, you cannot acquire position randomly. Bullish news? Oops, big problem. S&P is crawling up. What a market. What a pickle. So here's a fund manager who is sharing that he just closed position on gold. So, using exact same method you're witnessing on S&P and oil. So, this is a position on gold from here in December 2016 to here. Every single thing you're witnessing on short-term S&P, this is a position by hedge fund manager. Joseph will be sharing in audio testimony his success with the method. 8 million, 9.5% profits. Thank you. Means the world. Great job. What you trade, absolutely up to you. That's what fund manager trades. And that's the accuracy you are seeing in the method each and every day. Doesn't matter if you trade S&P, little chart. Doesn't matter if you trade oil news. Formula remains the same. So, shock or not, S&P at exact same level, this little junky chart, where gold reversed from, where Joseph took the profits off the table. Anyone surprised? Decision point 2 in front of you on S&P. Remember that level on oil news? This is the range we're dealing with. No surprise whatsoever. Ladies and gentlemen, just to remind you, we discussed that this will be a major obstacle on oil, yes? How did I know? Simple. Fibonacci said so. Oil was not able to break through this level despite bullish news. Oops. Oil is heading to here. The rules are met. You know what to do with your trade. This was an obstacle, and we expected it to be. Second week in a row, we have a bullish news, and this was decision point 2 on oil. This is where S&P is now. Remember that? Same exact formula. What you trade, absolutely up to you. If you trade as hedge fund manager, you respect decision point 2, where gold is now. If you trade as a day trader, you must respect decision point 2. Every single time it's a different stop, a different target. Do you trade oil or do you trade S&P? Choice is yours. Decision point 2 is now. Here's S&P to the tick respecting reversal zone. That's the accuracy of the method. Do you want to trade with indicators? Good luck on that one. It's not about 2 ticks, 3 ticks. It's not about 50 points. Price and Fibonacci is telling you where to enter, where to exit. Every single stop and every single target spelled out by price and Fibonacci every time. You master price, you master Fibonacci, you can trade any instrument, any time frame. Choice is yours. So, as we discussed for years, this is where S&P is heading to. We will be looking at long-term positions in a bootcamp. You find day trading too much of a pain? You cannot conquer yourself? You will forever benefit from your investment decisions, like Joseph did on gold. Exact same formula, only difference what you trade. If you're a day trader, you're using exact same formula. Simply different account, simply different target, exact same accuracy. Reversal zone is present. Good idea to exit this trade. So if you manage to pull 2 points out of this overextended bullish market on S&P, if you manage to respect the rules on oil at the time of oil news, as I warned you, this will be a major obstacle. 50 for 50 cannot buy overextended rally. I don't care that the news is bullish. What you trade? Absolutely up to you. The sky's the limit. And that's the reason I love bootcamp, as you listen to students and graduates who accomplish consistent success time and time again, who trade various instruments by simply playing by the rules. Cannot invest on the news, cannot invest on indicators. But what you can is trade based on price action and based on the rules. And that's the core of the bootcamp. So, just a reminder, trading room closed completely. We are down to 5 places. March 13th through 24th, all the attention to price and Fibonacci only. New students not paying anything extra. All included in the course. To new students only. So, here is S&P. 2 points later, to the tick respecting reversal zone. S&P is heading higher, traders. As you're paying attention, 2 points later, adjust your trail. As you're witnessing each and every time, random stop and random target will not work. Proper stop and proper target does. Reversal zone is quite a problem. But as long as decision point 1 is respected, trail in that place, no matter what you trade. Ladies and gentlemen, brand new historical highs. How many points in profit are you? Will dependent on how you entered your trade. As I warned you, we are at historical highs, but no one's shorting this market. This trade on S&P struggled immensely. At reversal zone, this trade on S&P blasted to drastically higher levels. Here we are, 3 points later. Crawl is on, still remains to the upside.